Hello traders, good morning, good afternoon, good evening. Bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW SYS008 traders, and our website is www.stochastic-magd.com for general trading, for Elliott wave trading, www.24elliottwave.com. For all trade, we use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW traders. The title of this video is First Steps to Mastering the Zigzag Pattern. We are talking about the Elliott wave zigzag pattern. First steps to master the zigzag pattern. All right, there are 13 specific stochastic patterns. There are also 13 specific Elliott wave pattern, and the zigzag pattern is one of the patterns, okay, that we will discuss today. All right, how we can master the zigzag pattern. It's a very powerful Elliott wave pattern. And if you are day trading or swing trading, you are trading commodity, future, option, forex, all right, whatever you are doing in the market, you must learn to master the zigzag pattern. All right, take it from me, and you can quote me on that. Okay. So let's get started. I'm going to start drawing lines first, and then we're going to use a real chart, okay, to illustrate, okay, the zigzag pattern. So bear with me as I'm doing my own drawing on this chart, okay. So very fast, okay. The Elliott wave cycle, this is one thing trader must understand. If you are using Elliott wave and somebody asks you and say you know about Elliott wave, what is an Elliott wave cycle? You should be able to know that, okay. Especially if you are following us on 24 Elliott wave, you should know what is an Elliott wave cycle. All right? Or if you see somebody on the street making noise that they are master of Elliott wave, ask him or her what is an Elliott wave cycle. If he or she could not answer that question, just smile, okay? An Elliott wave cycle, okay, is formed of the motive waves and the corrective phase. Full stop, okay? There's a video on our channel, 24 Elliott wave channel, that you can check, okay? You want to know, very important. So looking at this chart here, let's see this. You see this chart here? There was a motive wave. The price went up, okay? The bullish trend. This is a motive wave, okay? So this stock that we are looking at is the Vodafone Group, PLC. We are on the yearly charts, all right? It's a bit compacted on the yearly chart, you see here, all right? The price went. This is the motive first, where I'm moving my cursor now, all right? The motive phase, according to the Elliott wave theory, is formed of 5 waves. The first wave, the second wave, the third wave, the fourth wave, and the fifth wave. Total 5 waves will form the motive wave. Amongst those 5 waves, we have 3 impulsive waves that are moving in a direction of the trend itself. So you can see that the price went up from here all the way up here. 3 waves among the 5 waves, okay, will be in the direction of the trend, and 2 waves will be contra trend. So though the price is going up, the price will not go in a straight line, all right? There are some times where the price will pull back. This is what we call the contra trend wave or the corrective wave, second wave, and the fourth wave. These are, okay, corrective wave. Though we have 5 waves, 3 waves, the first wave, the third wave, and the fifth wave are in the direction of the motive wave. But 2 waves are contra trend, second wave, and, okay, the fourth wave. If we want to buy in the direction of the trend, we must buy after the corrective wave. But what usually happens, trader will try to, all right? So that's the best, that's the lowest point to buy. It's possible to buy during the impulsive move, but very often you see that it will be easier to buy at the end of the corrective wave. So that's why we are doing this video now about the first step to master the zigzag pattern. The zigzag pattern is a corrective wave, so we want to know whether the pattern has ended or the pattern is completed so we can take a position. Alright? So if you want to know Elliott wave, you must master the corrective wave. Corrective wave, minds game, alright? Very important. Apart from the multi-wave, we will have a correction. So there was a trend. Okay, the correction is what we call a profit taking. So traders were buying, okay, and the price display 5 wave, and then they consider the stock or the financial instrument being overbought, provided that the fundamental are weak or the market cycle is about to change. All right, it's not because we can't find a way that we must sell. No. All right, so the correction is a profit taking. All right, harvest time. You know, if you ask the farmer, they will sow. All right, different grains, and there will be a time. All right, it will be harvest time, harvest celebration. Okay, people will harvest. Okay, and this is the time they take profit. Nothing wrong with it. That's why we see also in 2008, all right, it's a correction period. And people will say, we hate the bearish traders. Oh, these are crazy traders. They're destroying the market. But they are part of the market, and they are just providing another opportunity for other market participants to buy at a low price. So please give the bear breaks, all right? Okay? So people hate traders that are selling because they don't understand what's happening in the market. They don't understand the Elliott wave cycle, all right? So the Elliott wave cycle is from the 5 waves, okay? The multi-wave and the correction phase, all right? So after the correction phase, very often we are likely to see a new cycle again, all right? Provided that the fundamentals are sound and the macroeconomy environment is viable, okay? Very, very important. It's not because we see we come to the end of an Elliott wave cycle that the price will definitely go up straight away. We must now go to Google Finance. This is critical. Yahoo Finance, check the fundamental, check the market, use the trading triangle. It's a pause period. Sometime after the correction, the market may pause, which means consolidation for many months, wondering what's the next move for this financial instrument before we see a new cycle. This video is useful for traders and also for investors, okay? So what is a zigzag pattern? All right, the zigzag pattern, the typical classic zigzag pattern is like this. Price went down. Pay attention, all right? Price, there's a little bit of profit taking, not 100% profit taking. Shouldn't cancel this one. And then again, continuation. The shape of the price move is in the form of zigzag. All right. All right. So this is what we see. So for instance, we have an up move like this first up to this point, and then the price pull back, and then there's a little bit of move up, and then the price continue to move to the downside. This is a zigzag pattern. This zigzag pattern is correcting this motive wave right here. You get the idea? So whenever you see a zigzag pattern, ask yourself, what is the zigzag pattern correcting? If you see a zigzag pattern out of nowhere, and it's not correcting anything, any motive wave, any impulsive wave, well, that's not the Elliott wave theory. All right? So you want to know what the zigzag pattern is correcting. That's the first step. So it's a corrective wave, which impulsive wave, which motive wave the zigzag is correcting. Let's go a little bit deeper into this. The first part of the zigzag pattern, which is this part, will be formed of 5 waves. So it will be like this, okay? 5 waves down, okay? It will be divided into 5 waves. Are you with me? You know, this is a very powerful, okay, Elliott wave pattern. In fact, I should be charging you for it, but because you are my friend, I'll give it to you for free. All right, this is to laugh. So the first part of the zigzag pattern is formed of 5 waves, 5 small waves, or 5 sub waves, or 5 minor waves, okay? of 5 internal waves. Okay, you hear they're talking about internal wave. All right, so 1, 2, 3, 4, 5. So they move from here to here. Some trader will call it A. From here to here, they will call it B for Bravo. And from here to here, they will call it C. So the zigzag pattern is formed of 3 parts. The first part is formed of 5 subwaves. The second part is formed of 3 waves, which I'm going to draw. It's a bit tricky now for me to draw. So from here to here, hold on a second. Okay, it will be easier for me to do it like this. Okay, are you with me? All right. So the second part of the zigzag is formed of 3 subwaves. So the B wave, which is from here to here, is formed of 3 waves. 1, 2, 3. All right. That's the theory. You will see now when we go to the real chart that you will get a little bit confused, but don't get confused. All right. Stay focused. Okay, please. And the third part of the zigzag is also formed of, my apology for my drawing. I'm no expert in drawing, so just be gentle. If you are expert, okay, in this section, so be very patient with me. Don't bang the table. All right. Okay, that's fine. And the third part of the zigzag is formed of 5 subwaves again, of 5 internal waves. 1, 2, 3, 4, 5. So when we see a formation 5, 3, 5, the first thing that is coming to our mind is the zigzag pattern. The expert Elliott wave trader will be, okay, even following the pattern or understand the pattern as the pattern is being formed. All right? Why? That's a very good question. Why? Now, pay attention. I'm going to tell you something that I want you to remember that because you are 2-4 Elliott wave, okay, follower, and you like what we are doing, okay? When we are counting waves and we count 1, 2, 3 wave, after an impulsive move, the first thing that is coming to our mind, we are saying is a correction. So generally speaking, the number 3 represents correction, okay? Profit taking. So when you hear me saying correction, we are talking about profit taking, all right? But when we see we count 1, 2, 3, 4, 5, the first thing that is coming to our mind is an impulsive move. Go, go, go. A trend, that a wave that is in the direction of a major trend, all right? When we count 1, 2, 3, 4, 5, we are talking about motive wave. We are talking about okay, an impulsive wave, because an impulsive wave can be divided into 5 subwaves in all time frames. All right. I don't want it to be too complicated. We like to simplify it. So the zigzag pattern is formed of 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5. But the shape is in okay, a zigzag shape. All right. It's a corrective wave. All right. So, but we know that whenever we count 3 and whenever we count 5, I just said it, isn't it? All right. When we count 5, we're thinking of impossible. So the trouble that we get into, that we see a motive wave like this, price went up, trending up, and then we see 1, 2, 3, 4, 5. And the first thing that's coming to our mind straight away, we are thinking of an impulsive wave. And then we say, hold on a second. An impulsive wave. But the trend is up. How an impulsive wave can be a contra trend? And then we say, well, the only Elliott wave pattern that is giving us that correction time is the zigzag pattern. Are you getting the message? So when we see an impulsive wave, and then we see a correction that is form of 1, 2, 3, 4, 5 waves, we say, hold on a second. What kind of correction this one? Normally it's free. When we're talking about free, we are talking about correction. Now we have 5. But the first thing that is coming to our mind is an impulsive wave. Hold on a second. Yes, it's a zigzag pattern being developed. At that point in time, ladies and gentlemen, we are saying to ourselves that the correction that has begun at this point in time and reaches this point because we have counted 1, 2, 3, 4, 5, which is a contra trend to a bigger trend, is telling us this move down is betraying straight away what is likely to take place. It's telling us that, hey, George, the correction that has started here and reaches this point is not finished yet. That's the first thing we should know when we are using a zigzag pattern. This is the first step, okay, to master the zigzag pattern. When we count 1, 2, 3, 4, 5, which is a corrective wave to downside, we know that the correction is not yet finished. Now, if you forget everything that I've said in this video, at least remember that, okay? The correction is not finished yet. So at this point in time, the experts, the professionals start thinking that we must see 3 waves up. 1, 2, 3 up. People say that, I told you the trend is not finished. They are thinking that there will be another bullish trend, but it's not, because this the internal wave of the A part of the zigzag, okay, is betraying, it's telling us what is likely to happen next. It's telling us that, no, this move that has started here is not a new cycle, but it's part of the correction. And as more bulls are getting too excited, buying like a crazy, okay, traders or investors, they get into trouble. And then boom, 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 5 wave down. So remember, the first step to mastering the zigzag pattern is that when we count 1, 2, 3, 4, 5 waves to the correction, to an impulsive wave, we are, our mind is clicking straight away to us that the correction is not finished yet. In fact, we can look for opportunity to buy at the end of the first part of the zigzag, which is the 8th part, that is form of 5 wave. It doesn't mean that we'll buy straight away. We'll look for a better support level and take a valid signal. I can show you hundreds of examples where traders are trying. This is the problem. Whenever I have some traders in the past, this is not criticism, all right? These traders are intellectual. The way their mind function is just so sharp. They are scientists, but it's one thing to be a scientist and another thing to be, okay, a trader. A trader is somebody, the French word for it is to be malleable, okay? You are flexible, all right? You can fold, you can be stick, okay? You want to be very calm, you want to be gentle, you want to be relaxed. But if you use the Elliott wave like a science, okay, you can, okay, use it wrongly. That's all I want to say, all right? So if you are that type of trader and you have this kind of mindset like Lavoisier, I'm encouraging you to, okay, to be born again, all right? So try to be a different person, train yourself or your mind, okay, to see it in a more practical way instead of using it like a science, okay? All right? So this is what we need to remember. Count 5 wave, which is a contra trend, is telling us that the correction is not finished yet. It's also telling us that there is a high chance that we may see a zigzag pattern. And we can look for opportunity to buy at the end of the first part of the zigzag right here. Doesn't mean we just buy. It's like aggressive trader. We check the fundamental and we see what's happening. As the move is moving up, the next thing you as a zigzag master should remember is that the B part of the zigzag, which is from here to here, very often will find it very difficult to cross the 50% retracement level, Fibonacci retracement level, of the A part of the zigzag. This is the A part of the zigzag. All right, where I'm moving my cursor now. This is the B part of the zigzag. And the B part of the zigzag will find it very difficult to cross the 50% Fibonacci retracement level of the A part of the zigzag. Are you with me? If you miss something, all right, put a comment below or replay the video, all right? So as we see it, 1, 2, 3, 4, 5 wave, contra trend, correcting a part of okay, a trend. This is very, very important. That's why I draw the trend part of it. Otherwise, it's not a zigzag pattern, all right? If it's not correcting anything, it's not a zigzag pattern. So the question is, what is the zigzag correcting? The first part of the zigzag, all right? This is very important. So as we see now in form 5, and then people will start pushing it up again into 3 wave. Sometimes it can be messy, which I'm going to show you now on a real chart. 1, 2, 3, all right? We draw straight away the 50% Fibonacci retracement level of the A part, A for alpha, A part of the zigzag pattern. Here it is. And sometime, ladies and gentlemen, that's why I'm saying to you, it's not exact science, it's a guideline. These are guidelines that we follow, the step that we follow, all right? So sometimes they probably go above the 50%, even go to 61.8%, even a 66%, all right? 66% Fibonacci level, all right? You may say, I never heard about 66%. Trader use also 66%. I'm telling you now, there's a video that I put on YouTube about that, okay? So you just watch it. So if you want to be very patient, you can 1, 2, 3, 4, 5, and when about 50%, just relax. Relax. Let it come back below it, and then look for opportunity to sell below the 50%. Because the 50% Fibonacci retracement level is a psychological price level that is dividing this part of the price into 2 zones. The zone above bullish, the zone below bearish. So if you went above the 50%, just watch it and relax. Because you know that the correction is not completed yet, and you are not forcing the area wave pattern onto the market. It is something else we don't want to do. All right? All right? We don't want to fight the market. We want to flow with the market. We don't want to say we are smarter than other traders. I'm an expert area wave trader. You cannot tell me, okay, what the market will do. I will tell you what the market will do. Don't get into that mode. All right? The elephant is the market, and no one can fight it, okay? So that's the next thing that we want to know, the 50% Fibonacci level of the A corrective wave, because the B part of the zigzag will find it hard to break above it. Sometimes you will see beautifully, it will stop exactly on the dots, on the 50%, which is beautiful. We all get excited about it, okay? As always, whenever you're going to buy, check the fundamental, all right? Whenever you're going to sell and you want to sell and hold for few weeks, few months, all right? Check the fundamental. Is the company about to release the economy, their earnings, all right? If they're going to do that, careful, all right? If they beat the analyst estimate and you are selling, they probably gap up big time, all right? So, talking about first step to master the zigzag pattern, like the pros, okay? So we know that when we see 5 wave down like this, it's telling us that the correction is not finished yet. Because the problem that traders are facing is this. There was an impulsive move, and there is a pullback. People will check the volume indicator and see where it's going to go back up. As the big corrective wave is starting, traders say, I told you it's going to go up. Now again, we have another bullish cycle. But it's only part of the story, because the internal wave of the A part of the zigzag is forecasting that there is a high chance that we may have a zigzag pattern, that the correction is not yet finished. As the B part of the zigzag is starting, we are watching a 50% Fibonacci retracement level of the A part of the zigzag pattern. All right? You are 2-4 area wave trader. You are not area wave trader. You are 2-4 area wave trader. All right. So you want to be. I'm trying to encourage traders. Okay. Don't think that I'm talking like this. Trying to encourage traders. I'm getting a bit excited about it myself. Yes. Yes. All right. Okay. Let's get a bit fanatical about. Okay. All right. Mr. Nielsen Elliott theory. All right. So here we are. So as the B wave is completed, though I'm speaking like this, I'm very serious. All right. So as the B wave is part of the zigzag is completed, we will expect 5 wave down. Now, I need to tell something very important to traders. Do not think that the price will always give the 5 wave down. Nothing, sometimes you will see it. We see 1, 2, 3, 4, 5 wave, 1, 2, 3, and here the price will just go sharp down. And without showing you any internal wave, and you are wondering, what's going on? Now it went down fast, and you are thinking, well, it's supposed to be into 5 sub-wave. That's what George said. Why the price just go down? I can tell you now, So the last part, okay, which we call, if you play computer games, all right, you do racing, all right, they're on your Android phone, the last lap is the speed, isn't it? So you see very often in the last lap, even the athlete will go faster, they'll try to go faster to beat their adversary, okay? So the same thing happens in training. As people see the pattern become very clear because some trader couldn't detect that this pattern is being formed. Now they see clearly at the end of the B that, well, this is a zigzag pattern being formed. They are going to look for opportunity to sell here. And sometimes the last part of the zigzag pattern can be messy. So do not be, okay, confused when you see the last part of the zigzag, a bit confusing because now it's exposed, everybody's selling, the price may go even fast, down. Another thing that I need to say to traders here, this is about a practical trading and practical investment with real money, all right? One thing I want to say to traders again, a stock went up bullishly, which means fundamental was solid, okay, macroeconomy environment viable, stock went up. There were some investors that did their homework, they know their ratio that they have used, what propelled them, what is, okay, force them or encourage them to buy, they know it. As they took the first part of the profit, which is, okay, the A part of the zigzag pattern, now, there are, during the time that we have the A part of the zigzag, there are also bearish traders. They were not, okay, they are not profit taking, but they are selling. So, from during the first part of the A corrective wave, this is normal profit taking. But among this, during this time, you will see that some traders are not taking profit. They are selling. They are just selling. But majority of traders in this session are profit taking. They are taking profits. They know that the motive wave is completed and they want to come out, okay, take their profit, harvest time, okay. But at the same time that the harvest time is starting, there are other sellers that will come in and start selling. These sellers will very often will create this a big corrective wave. All right? Because they are not profit taking, they are sellers. So they also understand the Elliott wave pattern. They see 1, 2, they say, well, let's sell. They are sellers, the price reaches from 5 way down. They are smart traders who understand the Elliott wave. They take profit. As they are taking profit, and the price went 1 and 2. Either buyers also see that the price is going to go back up, they buy again here. But as the price is going up and reaches the 50% of the A part of the zigzag, okay, more profit taking takes place. The investors that were buying during the multi-wave, who did not take profit during the A part of the zigzag, were wondering why the price was going down like this, because they don't understand why the price going down. They see their profit being erased. Now the price push it back to the 50% level of the A corrective wave. They say, well, oh, it's not going down, it's going to go back up. Now as they see, okay, that it start going down again around the 50% level, or they all just start taking profit and they say, well, we must well take our profit now because we don't know when this thing is going to stop. We must well take our profit, and that will form, okay, the C part of the zigzag pattern. But before we get too excited about this, the C part of the zigzag pattern can be a little bit funny sometimes because, you know what? There's another trend that was in place, which is the multi-phase, all right, you remember? All right? And I told you that there were investors that do their homework, their due diligence, and know why they should buy the stock. But as the A corrective wave, the A part of the zigzag, the B part of the zigzag is completed, and the stock is going down to form the C part of the zigzag pattern, sometimes, repeat, sometimes the C, okay, the C for Charlie part of the zigzag can, okay, bring the price below its book value or below its fair value. As long-term investors who know the true value of the stock, see that the stock is below its fair value, they will start buying again, provided that the company is innovating, has excellent product, and they are making money. They will buy. What do I mean by that? I mean that sometimes you may see that during the C corrective phase of the zigzag pattern, they must be very, very cautious, because sometimes the C corrective, the C part of the zigzag can break the price, can bring the price below its fair value. Or if the stock is what we call a dynamic bullish stock, okay, dynamic bullish stock, which has a lot of cash on their balance sheet, during a C corrective wave, the price may change direction without any warning, which means you will be counting your wave and say more to come, more to come. What I'm saying to you, be very, very agile during the C part of the zigzag pattern, because sometimes the investor may come in and start buying straight away. They don't care about the Elliott wave zigzag pattern. They are using, okay, fair value. They are using other ratio. They are using, okay, earning yield. They are using other fundamental ratio to make that decision. And you are using Elliott wave. And sometimes these okay, market participants do not care about Elliott wave very much. And all they care about is the true value, all right, of the financial instrument that they are trading. You get a picture, all right? This video is about the first step to master, okay, first step to mastering, okay, the zigzag pattern, all right? What we want to understand when we see a corrective wave formed of 5 waves, after a motive wave, very important, after a motive wave, after an impulsive wave. I'm talking like this to get your attention so that you don't forget that part of, okay, everything that we have said, all right? We are saying that the first thing coming to our mind is that the correction is not yet finished. Now, do not use it as a sign. Do not force it onto the market. Do not think that, yes, I have an edge. Oh, yes, you have an edge. That's true. A fair statement. Yes, you have an edge. But don't go ahead of the market. That's what I want you to remember. We will now monitor, okay, the B part of the zigzag pattern, which in normal condition, in more than 70% of the time, will find it very difficult to go above the 50%. Sometimes you go above it, but sometimes you will find it very difficult to go above the 50% Fibonacci retracement level of the A parts, A for alpha, A parts of the zigzag pattern. From here to here, that's the A part of the zigzag pattern. From here to here, that's the B part of the zigzag pattern. All right? As the C part, C for Charlie, part of the zigzag is underway, we must not forget, okay, the investors, traders, market participants that are using fundamental ratios to make their decision. You must not forget the true value, the fair value, all right, talking about the smart median line, all right, and other ratio, all right, and the macroeconomic condition is the market itself, okay, at a cycle point, all right, is the market, okay, is the market at the end of, sometime you will see it as this is taking place for an individual stock. I need to mention this. All right, so you are expecting your 5 wave down, but already the S&P 500 has completed its zigzag pattern. This is one thing also that can mess up your wave count if you don't use what we call the trading triangle, the market first, the sector, before the individual financial instrument. The heart of the trading triangle, the leaders, the news, and the fundamental. Ladies and gentlemen, we are talking about practical trading, practical swing trading, practical investment. And we don't want to, okay, violate those simple, okay, guidelines, all right? Now, if you are following us, you hear me say this 100 times, okay, you know the story. Oh, you understand me, all right? Don't get upset about it, because I will say it again and again, okay? So don't get upset about it, but just know that, yes, George again with the same story, okay? All right? So sometimes you may see the market or the S&P 500 or the Nasdaq 100 or the CAC 40 or the DAX 30, okay, or the FTSE 100 or whichever index you are trading. The stock is listed on one particular index, and maybe the market itself has completed a zigzag pattern. Be aware of that, okay? So during the C part of the zigzag pattern, if the market has already completed its zigzag pattern, be very cautious. Be very cautious. All right, be very cautious. We see that in 2009, when the S&P 500 started moving up, and a lot of stocks were trying to correct itself, and they just changed direction and follow the S&P 500. All right. Another thing also you need to pay attention to, you may see sometimes the market leaders, I talk about market leaders at www.dayprotrader.com. The market leaders for NASDAQ 100, two market leaders, Google and Apple. So you may see, maybe you are checking a tech stock, and the Google has completed a zigzag pattern, maybe Apple has completed a zigzag pattern, but the stock that you are looking at is still is still waiting to complete it, C part of the zigzag. I'm not saying that the stock will not complete it. All I'm saying to you, be cautious. All right, be cautious. Don't push it, okay? Don't push it. Or don't be arrogant to other market participants, okay? That's what we are talking about, okay? That will do for this part, this first step to master the zigzag pattern. Okay, I think I've said enough. I will leave it like this, and maybe we'll record another video in the future, which we will call the second step to master the zigzag pattern. I hope you have found this video also useful, okay, and we put into use, okay, to make excellent decisions. But as I promised to you, you are wondering what I've said before, that we will also look at the real charts. So you say, Joe, you promise, you must do it. Though I'm willing to close the video now, I will stick to my promise, okay? So now, okay, my apologies to trader, this video has been a bit long, but let's continue. I promise that we'll look at the real chart. Here we are looking at Vodafone stock. So we are on a yearly chart, which I like to look at. We see that the price went up to this point, okay? Let's do it very fast, and then pull back, and then the price went up again here, okay, and then the price went down a little bit, and now it went up. I want you to pay attention to this section here. 1, 2, 3. It looks like a zigzag that we have drawn. See, 1, 2, 3. Okay, all right. So I will remove the last part here. So what we have seen that there was an uptrend which started from 1996 for Vodafone up to this year 2000. 4 years in a row, okay, the stock was going up, a bullish trend. Then we see a little bit of profit taking, which is not 100% profit taking, shouldn't be 100%, which means this move should not come all the way there and cancel the whole move. It's not 100% profit taking, great, so it's a profit taking. And then it went up again, all right, and then come back again. So this shape here, you see a little bit funny now. It looks like a zigzag. This is a zigzag. So from the yearly chart, I can see straight away that this stock has a zigzag pattern. I just draw it like a chart. Okay, like I said to my son, it went up, it went down, it went up, it went down. Yes or no? Yes. Okay, so this is zigzag pattern in this session. The next step, you can go now. Let's remove this one. Are you with me? Okay, let's remove the first part. According to the theory, the B section of the zigzag, which is this section here, shouldn't, in most of the, more than 70% of the time, will find it very hard to go above the 50% Fibonacci retracement level of, the A part of the zigzag. So I'm going to draw my Fibonacci retracement level. I'm going to draw it up to the week. Normally, sometimes I don't do that. And I want to show you where it's the 50% Fibonacci retracement level. Right here, right now, right here, okay? 50% Fibonacci retracement level. I'm talking like this to make myself relax a little bit, so I don't get too tired. Okay, so don't think that I'm making a lot of jokes, but I'm doing it for myself sometimes and also for traders, okay, to make you laugh, so you don't get bored or whatever. Okay, so this is the red line that I'm drawing now is the 50% Fibonacci retracement level, right here, right now. Okay, you see. So the A part, A for alpha of the zigzag pattern is from here down to this level. Look how the B part of the zigzag, which is from here to this point, has stopped exactly on a 50% retracement level. All right. So now let me remove my drawings. Okay. Now the next thing we want to verify. Let's see now on this yearly chart, can you notice that this part, this A part of the zigzag is from the 5-way? It's a question. Let me put it to you again. On this yearly chart, can you see the internal wave of the A part of the zigzag? The correct answer is no, you can't. Can you see phi wave? You can't see phi wave. How do we find it? If, for instance, these are Elliott wave count guidelines, okay, go to www.24elliottwave.com, watch every video. All right, this is true. Spend a whole day at 24 Elliott wave. All right, now, okay, all right. We will go to another time frame. So if we are counting wave on one time frame and we can see on another one, we will go to another time frame. That's what we do, okay? So I've done my homework already. Okay, let's try to go. What I'll do, okay, it's the red part, okay? All right, let's go now to the monthly chart and see whether we will see phi wave, okay? Bring it here, bring it here. We are talking about this session here, okay? Can you see phi wave? Okay, let's do it like I'm showing, okay, children how to count wave. Look, it went down straight, it went down. It didn't, you see? Yeah, that's what we see on the monthly chart. So if we see on the monthly chart like this, we will say, well, George, it's not phi wave. This is what the children will tell you. They will say, Daddy, it's not phi wave. It's 1, 2, 3. It's 3 waves down. If you are talking to children, they will say, yeah, no, it's 3. It went down, it went up, it went down. So on a monthly chart, it doesn't look like the A part of the zigzag is formed of 5 waves. In fact, it's showing us like it's formed of 3 waves. Okay, let's go to the weekly chart. Okay, I'm doing it like this. But there is a problem here because on the weekly chart, I can't see that portion, because I don't have enough data for the weekly chart to see that data. But I will go instead to the 8 days. 1, 2, 3, 4, 5, 6, 7, 8. 8 days chart. I'm using TC2000. Most of the software will not allow you to do that, but TC2000 will allow you. 8 days chart, okay? I'm going to zoom into the chart, though I'm getting a little bit tired now. Let's push it a little bit. All right, ladies and gentlemen, let's push it a little bit. All right. And we're going to zoom. But this now you see I'm drawing on the yearly chart. Okay. But I'm going to adjust it on my 8 days chart. So now on the 8 days chart, okay, we're going to zoom into the 8. Okay. We're going to zoom on the A part of the zigzag. A for alpha, the A part of the zigzag, A for alpha, okay? Are you with me? All right, so I'm talking a little bit slowly so they can understand what I'm talking about. So price went down, as the children will say, and then price went up, okay? And then it went down all the way here, and the children will tell you that, and then it went up again, all right? And then it went down. Now, how many are they? 1, 2, 3, 4, 5. You see now? So we have learned something about how to count waves now, okay? So on a yearly chart, we couldn't see the internal wave. On a monthly chart, it looks like 3 waves. Well, it's confusing. We will say, yes, it's not too bad, it's 3, because 10 is the correction. But it doesn't give us an edge, because if we notice that it was 5, we will be thinking that there will be more correction on the way. Now, I couldn't have my weekly chart because I don't have enough data for it. Luckily, I'm using TC2000 that allows me to see 8 days chart. So now I have, on my 8 days chart for this Vodafone stock, I finally zoom into it and can clearly see with my eagle eye, so to speak, all right, these, okay, 5 internal wave or 5 subwave. 1, 2, 3, 4, 5. So if you were here, all right, if you were here, all right, though we couldn't see the whole motive wave in this session, are you with me? We couldn't see the whole motive wave in this session. There are more data, but okay, I don't have enough data on this 8 days chart. So though the motive wave is more than this, okay, this session when I'm moving my cursor, as we see 1, 2, 3, 4, 5 wave correcting the motive wave, we will be wondering at this point in time, we will be looking for opportunity to buy. You remember what we said with my drawing. We look for opportunity to buy here. But we know that the correction is not finished yet. As we receive a signal to buy here, ladies and gentlemen, we have an edge. Well, we will be saying to ourselves, okay, let's check where is the 50% of the A part of the zigzag. So we will do something like this, and we will draw that warning line. So we will say to ourselves very often, more than 70% of the time, the zigzag pattern, the B part of the zigzag, will find it very hard to go above the 50% level. So we buy here, we will be hoping that slowly but gradually the price will come near the 50% level, and we will take some profit. And we will take profit here, and we'll also look for opportunity to sell, because we know that the first part of the zigzag pattern has betrayed what is likely to take place. We will be looking for opportunity to sell when the B part of the zigzag is completed. We also know that sometimes the B part of the zigzag can go above the 50% of the A part of the zigzag. Ladies and gentlemen, are you with me? I think so, you are. Okay, if you are getting tired, okay, pause the video, go and drink something and come back. Alright, if you are getting tired, you are watching any video and you are getting tired, okay, eat something or drink something. Don't push it. If you push it, what I do myself when I'm working and get tired, I stop. Because when you get tired, you start making a lot of mistakes, you start doing pushing things, and you get into trouble. So I try to discipline myself. Whenever I truly get tired, I stop straight away. Okay, it doesn't matter what I'm doing, I stop and I go and take a bit of break. All right, in London, it's very important. The coffee break, the break time is very important in London. All right. So then, okay, so in reaching this point, we are looking for opportunity to sell. If you receive a signal to sell, we have an edge, we will sell. Now we will expect the C part of the zigzag. Now I'm going to change time frame because to see clearly the C part of the zigzag and see whether it has been an orderly C part of the zigzag, or was it messy, as I was explaining to you that there are various reasons why the C part can be a little bit confusing or messy. We are now on a monthly chart, and let's bring on the chart. You can see that on the monthly chart, I will remove some of my line, okay, because we have finished with them. And this section here, this is the C part of the zigzag, okay? You can see that it didn't go very much below the end of the A part of the correction, right here, all right? So 1, 2, 3, 4, 5, and then, in fact, I did not say anything about the B. The B, you see, the price went up to this level, a bit messy though. And then we are on a monthly chart. I can go back to my 8 days chart and zoom into it. But on this monthly chart, we can see that we can accept that the B part of the zigzag, which is from here all the way here, from here to here, is formed of 3 waves. 1, 2, all right, 3, all right. So 1, 2, 3, 4, 5. First part of the zigzag. 1, 2, 3. Second part of the zigzag. Now we're going to zoom into the third part of the zigzag, which is this section from here to here. It did not go below the lowest point of the A part of the zigzag. All right. So let's do it. So it went down, okay, and then we have two green candle here. So it went a little bit up here, as the children will tell you. Yes, it did went up. You say no, it didn't. You say yeah, it did went up. So do it like a children. So it went up a little bit, okay. If you're having difficulty to count wave, you can ask a chart to help you. They will tell you, okay. They will draw it. They will tell you, yeah, it went up a little bit here, all right. And it went down again a little bit here. So if I go to my 8 days chart, it will be much better to see clearly on my 8 days chart, because we are TSTWS S008 traders. Nothing to do with 8, nothing magic about 8, all right? Okay, the 8 represents a cycle. 1, 2, 3, 4, 5 multi-wave plus 3 correction. 1, 2, 3. 1, 2, 3, 4, 5. 1, 2, 3. In total is 8. Generally speaking, 8 represents a full cycle. But before you get too excited and thinking that the TSTWSY is 008 is about Elliott wave and purely about Elliott wave, it has nothing to do with Elliott wave, though it's about a cycle. All right? Simple. All right, very simple. I need to warn traders, when I'm writing a trading system, I try to simplify it and simplify it and simplify it. That's what I'm doing. So be aware of it. Now, when we have complicated matters, I discuss it on YouTube like this, okay? All right? So now we see that the third part of the zigzag is formed of, okay, 5 waves. 1, 2, 3, 4, 5. So Vodafone has been very friendly to this zigzag pattern. So there was a motive wave, all right, in fact, from 1996 all the way to 2000. Then we have, okay, the first part of the zigzag pattern for this Vodafone stock from the year 2000 up to 2000, mid 2002, okay, mid 2002, all right. And then we have, okay, the C part of the B, the second part, or the B part, B for Bravo, the B part of the zigzag pattern that was formed from the mid 2002 up to, okay, nearly the end of 2007. That was the end of the B part of the zigzag pattern. From the end of 2007 up to 2009, okay, beginning of 2009, we have, okay, the completion of the C part of the zigzag pattern right here. So, in fact, in 2009, as I explained to you, the S&P 500 start going up. The Fed, okay, Mr. Bernanke start pumping money into the market. A lot of liquidity hanging around. The bank decided to push in the stock market, and the stock market start going up in 2009. As you can see, luckily, the C part is completed for Vodafone before, okay, at the same time when the S&P 500 start going up. But you can see that this stock did not go up fast, okay, it was slow move up, which means the long-term investors checking the fundamental, okay, were not very enthusiastic until this year, 2013, when the stock finally break out of this consolidation session. So there was, okay, we have the beginning of the Elliott wave cycle is right here, but the end of the cycle is right here. That's why we say to traders, when we see a stock go up like this and goes back down almost to the 100%, the starting point, this is a cycle point, all right, which I mentioned at www.youtube.com/George Trio. If you check our video, I mentioned in some of my video there what is a cycle point. So as you can see, this stock start here, went all the way up here and almost went back to the starting point. Not exactly, but almost. All right, to the starting point. All right, and an Elliott wave cycle is formed of the multi-wave. This is the multi-wave here, all right, which is formed of 5 waves. This is an impulsive wave, an impulsive move session, a trending first, followed by a correction. As you can see here, a lot of traders will think that the correction has ended here. But no, the correction is not finished yet, because the internal wave of this correction is warning us that, George, though its correction is formed of 5 subwaves, there's a high chance that the correction is not finished yet. We will expect the B part of the correction, which is 1, okay, 2, 3, and then 1, 2, 3, 4, 5. Ladies and gentlemen, this is the end of this video about first step to master the zigzag pattern, and I hope you have learned something from it, okay, and we'll put it to use, okay, to make excellent day trading and swing trading decisions. The trading drill, ladies and gentlemen, is this. We are looking for a setup, and then we will validate the setup. So when we see a zigzag pattern on one time frame, we will check the higher time frames to confirm the pattern, okay? Then we will wait for the signal on the signal time frame, and then we will select a low risk entry point on another time frame. This is the trading drill. Apart from the trading drill, ladies and gentlemen, do me a favor. You are a purist, okay, technical trader. At least know when the economy news are due, all right? What kind of impact the economy news may have on the market. Do not use the technical alone. Combine the technical with the fundamental. The Elliott wave theory and the zigzag pattern are very exciting subjects, and traders love it. But sometimes it's one thing to know about the pattern and another thing to understand it. Our aim is to assist traders not only to know about it, but to understand it. And to understand it means that to enjoy it, make excellent, profitable, trading and investment decision. This video is valid for traders and also for investors. You want to invest, you do your fundamental analysis. It's time to invest. Do me a favor, learn a little bit about Elliott wave. This will allow you to time your entry point more accurately instead of just forcing it because your ratio has added up. We are the GSTW SYS 008 traders. Until the next time, enjoy yourself and be very happy. I'll speak to you soon.